this is a big thing that all of a sudden it was a little bit surprising to me. How all of a sudden, over the last month, we've kind of really brought this word inflation back into play. If we look at it, to me, in terms of what's happened with the 10 and the 30 year, is more of kind of down to economics 101. As we look for investors, look for more aggressive returns than other equities around the globe, there's just less kind of demand for the 10 and 30 year, so that, kind of these yields have moved up. Now, I say I'm not in the inflation camp just yet. And a couple of those things that we're really paying close attention to, and what our investors pay close attention to, is in terms of the CPI. So are we going to get some core inflation? And then the big thing that we're talking about a lot more this week is infrastructure spending. I think the big hurdle for the infrastructure spending in terms of the Biden administration is, I think that realistically they're going to have to break that up into more digestible chunks. Otherwise, it's going to be difficult to get that kind of spend through that might start to drive any type of real inflation, rather than this inflation that's kind of been caused, more from an event of people looking for, yields and returns more aggressively elsewhere in the markets. So I think that's something we're paying close attention to. And on the flip side of that coin is, if we do continue to see these spending programs start to roll out, I think that's going to weaken the U.S. dollar, and I think that's what markets are looking at. So we do see a little bit more focus towards the emerging markets to a relative sense. We've seen, our customers participating across some of the ETFs, like EEM, in terms of the emerging market space, in terms of adding additional exposure to the emerging markets through the ETF space.